And good afternoon. Welcome into Market Talk on this Tuesday, April 12th. Great to have you with us once again. Thanks for joining us. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our website. All of our streaming sources there, social media links, our radio affiliates, and much more. It's all online, markettalkag.com. Plenty to discuss today in the market trade with a lot of green numbers on the screen, pretty much green across the board for the most part. And let's bring in our good friend Jim McCormick with agmarket.net to help us talk through what we saw on Tuesday. Jim, good afternoon to you, sir. Hope things are well in Illinois.
Good afternoon, Jesse. Thanks for having me on. And yes, things are well in Illinois. We actually are having a taste of spring here in northern Illinois, up in the low 60s. No rain today. The rain does come tomorrow, but it is nice to at least have a little bit of touch of spring in the air today.
Little touch of spring and a little bit closer to spring planting. I think that's something that a lot of our farmers and ranchers are hoping for across the upper Midwest here as we get the next couple of weeks ahead. But Jim, as we look at the market trade today, as I mentioned, a lot of green on the screen, and it really, to me, it felt like a lot of the talk surrounding inflation was one of the big drivers of this risk on day today. Is that what it felt like to you, despite some of the other various news factors out there?
Well, I definitely think it is the inflation play. We did have that inflation reading today, and it was the hottest, in 35, 40 years. And I think that definitely drove the money into the marketplace. On top of it, we did have a big move in the crude oil market. The crude oil has been correcting recently off of its spike high of 130. The Saudis came out today, Jesse, and pretty much said, hey, folks, if you don't want to buy the Russian crude, that's fine, but we're not going to offset that production and try to make up for the crude you don't want to buy. And that really put a bid under the market and in the energy market. And the reality is we use energy for everything. We use it for fertilizer, we use it for putting the crop in the ground, getting it out of the ground. So as the energy market goes, so goes the rest of the commodity market. And the energy market is definitely catching an inflationary bid today, and that's spelt into the ag sector as well.
Yeah, crude oil up over 7% today, and watching that continue here this afternoon. Looking at the grain prices a little bit closer, I know on the corn side, December corn posting fresh contract highs again today. And, as we watch this move higher, soybeans recovered today. We'll touch on that in a minute. But, December corn, it feels like trying its best to buy some acres here during spring planting, Jim.
It definitely is trying to buy spring acres, and it needs to in reality. When you look at that acreage number they gave us here a week and a half ago, 89.5 million acres, Jesse, if we stick with that number, you plant 89.5 million acres, and statistically, we don't harvest everything we plant. We harvest around 92% of what we plant. So if you take the statistical harvested acres and multiply that times a 178 national yield, that would be a bushel better than last year. What does that gain us? That gets us about a 400 million cut year-on-year carryout. So our carryout this year is just shy about 1.4. That would drop this carryout closer to 1 billion bushels. Mind you, what's maybe the best crop we've ever had. And that's what the market's trying to do, is try to buy a few extra acres at this point in time, as well as try to caution, because I don't think we're at panic mode about not getting this crop planted. But right now, it definitely is not a late crop, but we're definitely not getting an early crop planted. And that's a little bit of concern. The supplies in the world are very tight because of what's going on in Ukraine, and the market is trying to, like you said, maybe try to switch a few last minute acres.
Well, and I look at the board, 731 December corn at the close today. I mean, that's a heck of a value. You translate that over to the cash side. I know basis varies across the country, but that's a heck of a value for new crop corn, Jim.
It is, and one thing about it is catching producers' attention. From what we are hearing from some of our commercial contacts, we are hearing some hedging going on today as you got cash prices out of the field at over $7, which is pretty amazing when you think about where we were just, let alone a few weeks ago, let alone a few months ago. So yeah, the $7 corn is definitely attracting attention, and I'm going to encourage producers to go ahead and lock some of that in. Your input costs are going to be sky high. You want to make sure you're profitable, because what does go up will come back down eventually. We just don't know when.
Very, very true. On the soybean side, yesterday was a pretty down day as we saw wheat move higher. Corn was kind of caught in the middle on Monday, but then, the soy complex really recovering here today. It was close to being the leader along with wheat. What's your thoughts on what we saw in soybeans here today and the recovery from Monday's trade action?
Well, there's a couple things. Mondays was under pressure because of, the ongoing COVID crisis in China. Now, here in the United States, we're pretty much through it, it seems like. No doubt about it, COVID is around, but luckily it's not too severe. And for the most part, Americans are going about their normal activities. And China, folks, they're still locking people down. They are treating COVID today like they were when it first came out 2 years ago, and they're not letting people move about. And that's what was putting pressure on the market yesterday. Now we're starting to hear a little bit of the lockdown letting loose a little bit. And that kind of gave us a little bit of relief rally. But the other problem is, or what's optimistic, Jesse, I should say, is China buying beans right now. They've only got maybe 10 to 15% of their coverage from June, July on out covered right now. So they still have a lot of, a couple months worth of coverage to get to to bridge old crop to new crop. And if you look pricing wise, at least coming into today, we were the most competitive price mid-June on out. So the Chinese are trying to bridge that gap from old crop to new crop. Like I said, they got 85, 90% of the coverage to go to meet that needs. More than likely, they're going to buy U.S. beans, hence the reason why we saw some strength in the old crop beans today.
How about the wheat markets? Wheat was our leader again here today. It sounded like a lot of concern over what's going on between Russia and Ukraine still. A lot of worry about escalating tensions in eastern Ukraine over there. I know we've gotten some different news items out regarding Ukraine's crop this year, but still feels like we're putting some war premium back into these wheat markets, Jim.
There's a couple things going on in the wheat market. Yeah, I mean, the market really is coming to the realization that the odds are they're not going to have a full wheat crop. The Ukrainians earlier this week were estimating their crop is going to be somewhere around 18 million metric ton crop compared to around 30 a year ago. And I think that's legit. I mean, they're just not going to have the fertilizer and probably the manpower to get this wheat out. So the world's worried about that. The other thing you're starting to see is Egypt's trying to get a little bit more aggressive buying wheat. But here in the United States, U.S. has become a problem with the drought issue. When you look at the forecast right now, at least the next 10 days, if you're east of the Mississippi River, you're going to get cool temps and a lot of rain, which is kind of supporting the corn market a little bit. But on the other hand, if you're in parts of the western part of Kansas, Oklahoma, Texas, right now, the latest model runs are saying there's not a lot of rain in the forecast and the heat is coming back, and we're worried about that wheat crop. So you've got a crop that you can't get out of Ukraine. Now there's questions about the U.S. crop size due to the drought going on, and hence we're starting to see some premium come right back into the wheat market today. Now you might notice the spring wheat was not as strong. I think that has to do with the big snowstorm that they're getting in North Dakota right now. That, it's kind of a two-edged sword talking to producers up there. They really don't want to deal with snow, just like I don't want to deal with snow here in Chicago, but they are happy to see the moisture. That will help a little bit at least.
Yeah, watching that spring wheat crop in the northern plains, that snowstorm you alluded to, I have heard some talk that some spring wheat acres have already been planted. Now, we'll see what that yields, once we get going on. But I know a lot of guys still haven't even thought about putting anything in the ground yet. So that will be interesting to see. Overall, Jim, looking at the markets, great strength here today. As we move forward here this week, we've got a lot of big reports behind us now. And as we get into spring planting season, do you have any just general thoughts for guys as they're getting into a very busy time of year here?
Well, I think what you need to kind of do for producers right now, they really need to kind of drill down before they get really busy and figure out where do they want to start marketing grain right now. I actually had a couple of conversations with several different producers today that, I'll be honest, they kind of put marketing on the back burner. They did. The market's been moving higher. But today, that cash price of corn out of the field at $7, looking at board price beans at 15, it is really starting to get their attention. And they were calling and saying, hey, what do you think? My bankers asked me, when are you going to start marketing stuff? Where are you at? So I'm going to encourage producers to really start and think about where they want to sell grain. Now, granted, maybe they want a higher price. December corn's trading around $7.30 today. Maybe you want $7.50. Maybe you want $15.50 for the beans. Whatever that price is, work out your numbers and then put that order in. Be it with a broker or be in the cash market. Get those orders working right now. We call them wish orders here because we just don't know what's going to happen day to day, hour to hour. With the volatility we're seeing, it's kind of a two-edged sword, Jesse. What's happening? The volatility is so bad right now. You're actually driving participants away from the market. You're not seeing the open orders from sellers like you normally would. You're not seeing open orders from the buyers like you usually would because of the extreme and the volatility. The margin requirements are so high. So what that's done is that's brought even more volatility into the marketplace because if you got a big fund that comes in and says, hey, look, I just got an injection of money and I need to own corn, they're going to bid into this market that's very thin above it and sell orders, and it's going to push the market higher than maybe it should. I want you, the producer, to have that sell order. Say, hey, if I'm willing to sell that price of crop or whatever price it be, $7.50, $7.75, get that order working because it may hit it for 1 minute and come right back down. You don't know how long it's going to be there. So now's the time to come up with that game plan, get the orders working. So the orders are working when you're in the field trying to get this crop planted.
Jim, let's flip over to livestock, and that positive money flow today also flowed into cattle and hogs. Hogs were the leader to the upside, but really everything was solid. We broke out of some sideways trading ranges, at least for a little bit here today. What's your thoughts with this protein sector? Let's start just with hogs since they were the leader. What's your thoughts with what we saw with the action there today?
Right now, the hog market, I was pleased with the action. We kind of been consolidating the last few days. We broke out to the upside. We are technically oversold. I think hopefully that's a good sign for the hog market. Unfortunately, we do have this bird flu going around the country. It continues to expand. I think as you losing some of that protein, the hog protein will make up for some of that. Mexico continues to be a very strong buyer of our pork. So hopefully that's a good sign for the hog industry. The beef industry, the beef market continues to firm up on the beef side of the equation. I think you got to be very optimistic going into the springtime, the grilling time, the summer demand. I think you got to be optimistic. The reality is inflation is red hot. I don't deny it. But the fact of the matter is that consumers have a lot of money sitting on the sidelines right now. By some estimates, up to $2 trillion has not been spent as we've kind of been locked down for COVID. I think a lot of people want to go out and spend that money. I call it a K-shaped recovery. If you're in that top third, you're going to spend the money. If you're in the bottom third, it's definitely going to be a struggle. But if you talk to people, you go to restaurants that I've seen around here in the Chicago area, they are full. People are going out to eat. And I think that hopefully is a very good sign, at least near term, for beef demand as well as pork demand.
Well, and on that beef side, cattle, it was surprising to see some of that very early week cash trade last week. We didn't see any on Monday, but we are starting to see some here today. So, feedlot country getting a little active, but of course, that big snowstorm we mentioned earlier going to impact some parts of cattle country here and some of that severe weather today. So I think that'll be interesting to watch here as we go through Tuesday into tomorrow and on through the rest of the week, Jim.
No doubt about it. And the other thing to remember, Jesse, the markets will be closed on Friday for Good Friday. So you're also going to see maybe a little bit of push in this beef market and the cash market to try to get that covered before the holiday as people want to wrap that trading up, I think, before Friday.
And that's another good point to bring up as well, with obviously with no trade on Friday with the Easter holiday weekend coming up. One has to wonder, what we could see potentially, or if we could see any more increased volatility just with a shortened week here, Jim.
Well, I think what you're going to see as we wrap up the week, you're going to see a little bit of positioning unwinding. I mean, the funds have been quite long, the grains. They're pretty aggressive buyers today. It wouldn't surprise me, Jesse, to see them back off a little bit and book some profits going into the 3-day weekend. We've definitely been cold and wet, especially in the Eastern Corn Belt. We'll be coming out of 3-day weekend. We'll see what the weather's giving us. I mean, if we're seeing a flip in the weather, we're seeing a little bit more milder, warmer temperatures, and we're starting to get the planters rolling and fertilizer on, I would not be surprised to see a bit of weakness coming out of the 3-day weekend in the grain markets. On the other hand, if we continue to see this cool, wet weather, which some of the models are kind of arguing, I think the market will be a little bit more concerned. Like I stated, we really do need a minimum of 89 million half acres of corn and pretty much a record yield to meet the demand. The beans are an interesting situation. Also, I want to make note talking to customers. I mean, I've been doing this for 25 years, and for years and years, we planted corn, then we planted beans. Well, right now, there's a lot of producers that want to plant beans and then plant corn. So maybe we're finding a little bit of strength in the new crop beans just for the point, Jesse, that we're actually maybe getting a little bit worried about getting the beans planted on time by not historical standards, but by near term. Customers, they want to get them rolling, get those beans so they hit that full maturity in the middle of the summer when we're at full sunlight potential. So it's something we need to keep an eye on next week. It could be a very volatile opening Sunday night.
Very, very true. Well, Jim, great stuff. We packed into a short amount of time here today. Any other final thoughts you have for us? Anything else you want to mention on this Tuesday?
All right, now also I'm going to mention, if you have any questions, call me directly at 815-665-0461. Call any of the Ag Market team members at 844-424-6758. And like I said, my best advice right now is get thinking where you want to market your grain, put those orders in. What does go up will come back down. We know it's going to cost a fortune to get this crop in the ground. You want to make sure you sell it profitably.
And they also have an app, agmarket.app. You can find it in the Google Play Store, the Apple App Store, and check them out online, agmarket.net. With that, Jim McCormick with agmarket.net. Appreciate the time here on this Tuesday, sir. Great to catch up with you, and we'll talk to you again soon.
Thanks again for having me on, Jesse.
This has been Market Talk for this Tuesday, April 12th. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great afternoon.